Now let's start looking at questions, guys. We have solved questions regarding lessee's accounting. Though we have discussed about lessor's accounting in the previous session, we did not solve any question there. We also have to solve questions regarding sublease and sale and leaseback concept. So this is the part of discussion that we will have now by solving certain questions, very limited questions as far as the lessor, sublease and sale and leaseback criteria is concerned. Let us solve these questions now. Let's look at the workbook. Let's continue with question number 33. We have done till 32 when we discussed about lessee's accounting. Let's look at lessor accounting. Lessor enters into a 10-year lease of equipment with the lessee. The equipment is not specialized in nature and is expected to have an alternative use to the lessor at the end of 10 years lease term. Under the lease, the lessor receives an annual lease payment of 15,000 payable at the end of each year. The lessor expects that the residual value of the equipment will be 5,000 at the end of 10th year. Lessee provides a residual value guarantee that protects the lessor from the first 30,000 of the loss at price below the estimated residual value at the end of lease term, which is 50,000. Guys, the estimated residual value at the end of lease term is 50,000, but the guarantee which is given by the lessee is 30,000. The equipment has an estimated remaining economic life of 15 years and a carrying value of 1 lakh with a fair value of 1,11,000. The lessee does not transfer the ownership of the underlying asset to the lessee at the end of the lease term or contain an option to purchase the leased asset or the underlying asset. If the interest rate implicit from lease is 10.078, how should the lessor account for the same in their books of accounts? Read the question, pick up the important concepts. I will start solving the answer. Up above, he said he is a dealer lessor. So you need to identify cost of goods sold as well. First of all, let's pick up what are the important terms in this particular question. Looking at question number 33, guys. In the books of lessor. And this lessor here is a dealer. That's why he called it as dealer lessor. Let's start solving. The first item that I find in the question is that the lease term is for 10 years. First, let me write down the lease term as 10 years. Second one, what are the lease payments? The lease payment also given in the question is at 15,000 at the end of each year. Apart from this, part 3. I have a residual value which is guaranteed GRV at the end of year 10 is given to the extent of 30,000. Apart from this, he has given me a residual value which is the fair value of the leased asset at the end of lease term is 50,000. Looking at these two, the most important aspect I can calculate, which is the UGRV, which is 20,000. Apart from this information, towards the end, he also gave me one additional information, that is regarding the discount element. The discount factor is 10 point, what is the amount? 078%. Apart from this information, one more extra information he gave me is fair value of asset. My fair value of asset is 1,10,000. He also gave me carrying value. The asset had a carrying value on the date of lease as 1 lakh. Based on this above information given, we will have to account for this transaction. First, let me write the accounting entry. Then you start answering what is the amounts which are relevant. Recognition in the books of lessor. Lessor recognizes a net investment in lease as lease receivable. So first write that entry. Lease receivable account debit. This should be measured at lower of net investment in lease or the fair value of leased asset as far as dealer lessor is concerned. If it was not a dealer, directly net investment in lease. At the same time, I'll also have to de-recognize the asset. I'm leaving one space for the debit because there is one more debit which I have to get. I'll come back to that. Credit to asset, which is the carrying value. You know the carrying value, so I don't mind writing it down as it is. The carrying value is 1 lakh. Since I know it, I'm writing it. Apart from this entry, since it's a dealer lessor, I'll have to recognize a revenue and a cost of goods sold. To revenue, debit the cost of goods sold or cost of sales. My cost of sales is equal to carrying value minus present value of UGR. What about your revenue? The revenue is equal to present value of lease receivable This is the combination of entry which I have to pass. Now let's try to record the entry. Now you will say, where is the profit or loss? There is a profit or loss because when you're debiting cost of sales and you're crediting revenue, automatically you're recognizing both the amounts of difference in your profit or loss statement. So let's try to start writing the entry now. Only one amount I know, what is the carrying value of the asset, which I have already written. I don't know the balance amount. Let's try to write down. First, let us determine what is net investment in lease. Put a heading as net investment in lease. Net investment in lease is equal to present value of gross investment in lease. Calculate. What is gross investment in lease? Gross investment in lease is lease rental, lease payments received over lease term plus unguaranteed residual value. Calculate now. Let's start. 15,000 lease rentals into present value annuity factor 10.078% over 10 years plus 30,000 of guaranteed residual value multiplied by present value factor of 10.078, 10. Calculate and check. Plus unguaranteed residual value, which is 20,000 into present value factor 10.078, 10. Guys, if you observe, only for 15,000 I have taken annuity factor, correct? In all other cases, I am only taking PVF because your GRV or UGRV is only arising towards the end of lease term, while your lease payment of 15,000 is arising throughout the lease term. So let's calculate 1 divided by 1.078. 1, 4, 5, 7, 8, 9, 10. PVF is 0.472. I'll get the PVF, no problem. 15,000 into, I'll leave this space. First, I know what is the PVF, so let me write down the PVF. 0.472 plus 20,000 into 0.472. If I press GT, I will get the PVF, which is 6.771. Calculate now. 15,000 into 6.771 is equal to 1,01,565 plus 0.472 into 30,000, 14,160, 20,000, 9,440. Is my PVFs and PVFs correct? Tell me if my PVFs and PVFs are correct, or should I calculate once again? I'm not sure, so you should tell me. Or I'll calculate once again. 1.1 divided by 1.10078. 10.78, right? 1.10078. Seven, 9, 10. Sorry, my bad. My numbers are wrong, guys. Numbers are wrong. Please check. My numbers are wrong. Please check. 10.078% My numbers are wrong. 0.383 is the answer. What about your PVF? 0.6124. 6.124 into 15,000 over the entire lease term is receiving an amount of 91,860 rupees. What about this one? 30,000 into 0.383 is 11,490. Lastly, 20,000 into 0.383, 7,660. Now check. Your answers are correct, I guess. The total answer would be 1,11,010. 1,11,010 is your answer. Check, it is 10.078. Earlier I calculated as 10.78. That's why I got a wrong answer. It is 10.078. So you will get an answer of 1,11,160. Guys, go up above. Your lease receivable should be measured at lower of net investment in lease, 1,11,010, or fair value of the leased asset, 1,10,000. So therefore, it is preferable for us, or it is easy for us to basically measure it at 1,11,000. 1,11,110 or 1,11,000. Sorry, fair value is 1,11,000, guys. 1,11,000. So lower of these two, 1,11,010 or 1,11,000 should be 1,11,000. Lower of net investment in lease, 1,11,010, or fair value of the leased asset, 1,11,000. I measured it at 1,11,000 itself. What is your cost of sales? Carrying value minus present value of UGRV. Write down below. My cost of sales is equal to carrying value minus UGRV. What is the carrying value of asset? Minus present value of UGRV. Sorry. What is the carrying value of the asset? 1 lakh. What is present value of UGRV? We just calculated up above 7660. This is the value. So this should be 92,340. Go up above and place cost of sales. 92,340. What is the revenue? The present value of lease receivables. Your lease receivables are basically a combination of these two figures. Your lease receivable is a combination of these two figures. That is 91,860 and 11,490. My revenue is equal to present value of lease payments. Your present value of lease payments shall only be 15,000 into PVAF, because lease payments do not include UGRV. 10.078, 10 plus 30,000 guaranteed residual value into PVF of 10.078, 10. We know these numbers, so I'm just directly picking up the numbers. What are your numbers up above? 91,860 plus 30,000 into 0.383, 11,490. Amount is 1,03,350. Go up above and place this in the value of revenue. 1,03,350. 1,03,350 is your answer. Check. Now you try to total it. 1,11,000 10 rupees of difference you will get. That 10 rupees is basically the amount which I should have actually included here. Exact 10 rupees of difference you are getting as far as the accounting entry is concerned. Look at the accounting entry. I'll hide myself. Exact 10 rupees of difference you will get. That 10 rupees you can either transfer it off to P&L, guys. That's not an issue. I can debit the P&L by 10 rupees. Or you can adjust the sales figure to 340. Either way, it is fine. Now, this is an entry which should be recorded as far as the books of dealer lessor is concerned. If you look at the dealer lessor's income in P&L is the difference between these two items. It is the difference between the carrying value minus present value of UGRV, which is written as cost of sales, minus revenue 1,03,340. So as such, if you look at exactly the income to be recognized is 11,000 in your P&L. Look at the entry and try to pick up the entry. Actually, the entry should have tallied. The 10 rupees of difference you are getting is because the lease receivable fair value was less than net investment in lease. If you would have written that as 1,11,010 rupees, then answer would have tallied. You can debit the 10 rupees to P&L or you reduce the revenue to 340 instead of 350. Guys, if in case the lessor, if in case I'm talking about, the lessor is not a dealer. He is just a lessor. He is not a dealer in the property. Then how do you record? Then I don't have to record cost of sales. Neither I have to record the revenue. So straightforward, I'll record the entry as lease receivable account debit to asset. I'll derecognize the asset at its carrying value. This lease receivable should be measured at net investment of lease. What is your net investment in lease? We have already measured the net investment in lease above and the amount was 1,11,010 rupees. Asset had a carrying value of 1 lakh. Therefore, it results in a gain of 11,010 rupees by giving the asset on lease. This should be transferred to P&L. Guys, if you observe, the resultant amount in the P&L is 11,010, and even if you look at the up above answer, exactly the answer is the same. It is 11,000. There is no difference as far as the profit is recognized is concerned. Your profit to be recognized will still be the same whether the lessor is a dealer or whether the lessor is not a dealer. It is not going to make any significant difference. If it is a dealer lessor, then I will, instead of writing 2 amounts, I will write 4 amounts. Lease receivable account debit to asset, that is fine. An additional debit to cost of sale and an additional credit to revenue. The difference between both is the amount which gets transferred to P&L. If it is a dealer, I'll have to recognize revenue in this way. Now that we are done with this question, we have answered both where the lessor is a dealer. We have also answered the point where the lessor is not a dealer, even though it was not asked in the question. Let's look at the next question. We are done with lessor accounting. Let's look at the concept of sublease that we have discussed earlier. An intermediary lessor where the sublease is classified as an operating lease under head lease. The intermediate lessor enters into a 5-year lease for 10,000 square meter of office space, which is the head lease with entity XYZ. Under sublease, at the commencement of head lease, the intermediate lessor subleases the 10,000 square meters of office for 2 years to a sublessee. How should the sublease be classified and accounted for under by the intermediate lessor? Wherever we come to the discussion on intermediate lessor or the sublease, we only have to discuss about the accounting treatment in the books of intermediate lessor. In this particular question, the head lease has to be recognized as an ROU asset and the liability for lease payment over the lease term should be recognized as a lease liability. But if you look at the sublease, it is 10,000 square meters just offered on a sublease for 2 years. When your lease term was 5 years, you are just offering it for 2 years, not for substantial period. Therefore, it should be considered as an operating lease. When you are considering it as an operating lease, I will recognize lease rentals as income over the lease term on a straight line basis or any other systematic basis. As such, I will not recognize another lease receivable in this case. So therefore, what is the entry that I have to record? Head lease is concerned, I will recognize under head lease, recognize the ROU asset and lease liability. At what value? Lessee's accounting. Present value of lease rentals over lease term. Using either the interest rate implicit from lease or the incremental borrowing rate to the lessee. Whatever rate you use, find out the present value, and such present value should be considered as the value of ROU asset or the value of lease liability. What about this concept of sublease now? Head lease is for 5 years, sublease is only for 2 years. Therefore, sublease should be classified as operating lease. Be classified as operating lease by intermediary lessor. Be considered as operating lease by intermediate lessor. Yeah. Therefore, lease rentals should be recognized as income over lease term. Numbers are not given, otherwise I would have calculated on a straight line basis or any other systematic basis. Any other systematic basis. So I'm saying, as far as the main lease is concerned or the head lease is concerned, I will recognize an ROU asset. I'll recognize an ROU asset and a lease liability. And such ROU asset and lease liability should be measured using an interest rate implicit from lease or incremental borrowing rate, present value of lease rentals over lease term. However, if I come to the sublease concept, the sublease is only for 2 years out of the entire 5 years of contract. In such cases, the lease rental should only be recognized as income on a straight line basis or any other systematic basis in the books of intermediate lessor. Guys, I first took up the concept of operating lease under sublease because it's a very easy concept. When you look at a finance lease, and if the sublease is a finance lease, that will be your earlier question of question number 34. I skipped that so that I would easily try to determine what is the operating lease. Operating lease does not have a significant accounting in the books of lessor. That's why I took this easy concept first. Now you look at what is question number 34. Now you will be able to determine what is the effect when the sublease is basically a finance lease. Read through this question. An intermediary lessor enters into a lease for 10,000 square meters of office space with entity XYZ, which is a head lease. However, under sublease, at the beginning of year 3, the intermediary lessor subleases 10,000 square meters of office space for the entire remaining lease term, that is 3 years of the head lease to the sublease. So therefore, this can be concluded as finance lease because over the remaining lease term, it will be leased out as sublease. How should the sublease be classified and accounted for by the intermediate lessor? So, guys, initial recognition is still the same. Only the sublease recognition will change. Only the sublease recognition will change. Right down. Sublease can be classified as finance lease. Why did you classify it as finance lease? Because since lease term, which is 3 years, covers majority of economic life of the asset. For me, the economic life of the asset is only the 5 years period under head lease. It is 5 years period under head lease. Therefore, I can definitely classify the sublease as a finance lease. If it is an operating lease, then the lease rental should be recognized as income on a straight line basis. But since it is a finance lease, what is the additional treatment? The intermediate lessor shall recognize lease receivable At what value? At net investment in lease and at the same time derecognize the ROU asset which was earlier recognized under head lease. Was earlier recognized under head lease. This is the accounting treatment. Whenever the subsequent lease or the sublease is basically classified as a finance lease, then the entry should be lease receivable account debit to ROUSA. Now, only that word recognized, I was covering it. Understand and write. We have solved both questions 34 and 35. One is sublease is a finance lease, other one is sublease is an operating lease. Now that we are done with this concept of sublease, let's get into the last question on IND AS 116, which deals with sale and leaseback. Look at this question, question number 36. An entity, a seller lessee, sells a building to another entity, buyer lessor, for a cash of 30 lakhs. Immediately before the transaction, the building had a carrying value of only 15 lakhs. Guys, carrying value is important for us because even the ROU asset should be a proportion of this particular a proportion of this carrying value. At that same time, the seller lessee enters into a contract with buyer lessor for the right to use the building for a period of 20 years with an annual lease payment of 2 lakhs payable at the end of each year. The terms and conditions of transaction are such that the transfer of the building by seller satisfies the requirements of determining the performance obligation satisfied under IND AS 115. That means he's saying the control over the asset is transferred, therefore it should be considered as a sale as per IND AS 115. The fair value of the building on the date of sale was 27 lakhs. Very crucial. Why is it crucial? Because if you look at the consideration, at the first line, entity sells the building to the buyer lessor for a cash of 30 lakhs. Guys, you sold it for a consideration of 30 lakhs, but actually the fair value of the asset was only 27 lakhs. That means your consideration is higher by 3 lakhs. We said there is a concept of prepayment which comes up or additional finance element which comes up whenever the consideration is not equal to fair value. Here the consideration is more than the fair value. Therefore, this is a prepayment, there is an additional finance element which is included. How much is the additional finance? I will talk about it. I will determine it. Initial direct cost, if any, shall be ignored. The interest rate implicit from lease is 12%, which is readily determinable per seller lessee. Buyer lessor classifies the lease of building as an operating lease. How should the said transaction be accounted for by the seller lessee and the buyer lessor? Forget about the buyer lessor, keep it aside, we will talk about it later on, because anyways that fellow is only considering it as an operating lease. There is no great transaction that he has to record. But when I am talking about the seller lessee, this is where the major discussion goes around. Let me bring out the most important aspect as far as the question is concerned. The most important aspect to me is that your sale consideration is in rupee terms 30 lakhs. But the fair value of the asset on the date of transaction was only 27 lakhs. I got a difference or excess of consideration to the extent of 3 lakhs. Consideration in excess of fair value. Since this is a consideration in excess of fair value, I should consider this as an additional finance. Additional financing which is provided by the buyer lessor to the seller lessee. Now let's talk about recognition of the asset. I'll have to talk about recognition of the asset. Let us try to recognize the asset now. Recognition of transaction in the books of the seller lessee or the buyer lessor, in the books of seller lessee. Since I have determined that there is an additional financing element, how does this transaction get recorded in the books of seller lessee? Let's see how the recording goes on. First, bank account debit. I've collected certain amount from sale. This is nothing but my sale consideration. What is the value of sale consideration? I already know the value of sale consideration, which is 30 lakhs. This amount I already got it. But he is leasing the asset back, so I'll have to recognize another debit to the extent of ROU asset. What is the value of ROU asset to be recognized? The value of ROU asset is to be recognized. I will pull it up later on. So I'll just put an asterisk. It is that proportion of carrying value to the extent it relates to the right of use retained by the lessee. How do I calculate this proportion of carrying value to the extent it is retained by the lessee? I will discuss about that aspect. I will fill that amount at a later point of time. What is the credit? I have to de-recognize the asset which has been sold. What is the asset? Building. Building. The carrying value of the asset should be de-recognized because the asset is sold out. What is the carrying value of the asset to be de-recognized? Already given to me that the carrying value is exactly 15 lakhs. This is already given in the question. If you want, I can check back the question and I can tell you. Look at it. He has clearly given me in the second sentence that the building was carried at a cost of 15 lakhs. So that amount of 15 lakhs I am de-recognizing. So the asset is sold out, derecognized from the books of seller lessee. But since you have taken the asset on lease, I will also have to recognize the amount of financial liability or lease liability. I'll have to recognize lease liability. How do you measure your lease liability, guys? Your lease liability should be measured at present value of lease payments. I'll have to determine this and fill up the amount. But don't forget, you said there is an additional finance because your consideration is greater than fair value. To that extent, I'll have to recognize profit or loss on transfer. Since I sold the building, there is some amount of profit and loss which I have to recognize. Now let's fill up the gaps. Only 3 gaps should be filled up, but out of which one of them is balancing figure, which is the profit or loss. I'll only have to fill up the value of ROU asset and the lease liability. Very simple to fill up these values, guys. First, let us put a heading as ROU asset and write down the value. What is the value of ROU asset to be recognized by the lessee? The seller lessee should recognize up above. One second. Let me go back to the paragraph. It is right here. Now look at it. Recognize the ROU asset at the proportion of carrying value to the extent it relates to right to use retained by lessee. Down ROU asset is equal to is the portion of carrying value to the extent the lessee retains the right to use of asset. It is a proportion of carrying value. So calculate. This is nothing but carrying value in proportion of the value it retains or the right to use the asset retained by the lessee. So therefore, into lease liability portion, that is your right to use the asset, divided by fair value of the asset. Fill up the amounts. Do I know carrying value? Yes, I know. What is the carrying value? 15 lakhs. Do I know what is the proportion of lease liability? I have no idea. I'll fill it up. I know the fair value is 27 lakhs. Out of this 27 lakhs fair value, to what extent have you retained the right to use the asset? I will determine with the help of my lease liability. So let us put up a heading called lease liability and determine. Anyways, I have to calculate lease liability, guys. What is your lease liability that should be recognized? Go back to the question and calculate what is the present value of lease payments. If I look at, he is ready to pay 2 lakhs of lease rental at the end of each year. Now this 2 lakhs of lease rental, he is going to pay for how many years? For a period they have entered into for 20 years. Look at it. So the seller lessee enters into a contract to, with the buyer lessor to right to use the asset for 20 years by paying 2 lakhs at the payable at the end of each year when the discount rate was 12%. Any initial direct cost is ignored. So let's calculate. present value of lease payments over lease term. How much are you paying? I'm paying 2 lakhs. How many years? 20 years. Same amount being paid over 20 years. I can apply present value annuity factor. Calculate 2 lakhs into present value annuity factor of 12, 3, 12, 20. Not 3 years, 20 years. 12% is the value or the rate given in the question over 20 years. Calculate and tell me what is the amount. 1 divided by 1.12, 1, 2, 8, 9, 10, 12, 13, 16, 17, 18, 19, 20. I think this is around 7.4694 if I'm not wrong. If I multiply this with 2 lakhs, then I'm getting an answer of 14 lakhs 93,000 something. Much? 2 lakhs into 7.4694. 93,880. Place it in the question there. The lease liability value should be 14,93,880 rupees. What is the proportion of ROU asset then? The proportion of ROU asset retained by the lessee to the extent of their right to use 15,93,880. Right. Divided by 27 lakhs to 15 lakhs. 8,29,933. That is the portion of carrying value which is retained by the seller lessee. 8,29,933. Find out the difference, which should be the profit or loss to be transferred to P&L. 30 lakhs plus 8,29,933 plus or minus 15 lakhs plus 14,93,880. The profit which I have to recognize on the transaction from sale is 8,36,053. Check the entry once. I hope my computations are right. Any mistake in computation, please let me know. Computations, I'll show it here. ROU asset, proportion of carrying value to the extent the lessee retains his right to use the asset. I've calculated lease liability at their present value, 2 lakhs multiplied by present value annuity factor at 12% for 20 years. That is the entry to be recorded in the books of seller lessee. What is the entry in the books of buyer lessor? In the books of buyer lessor, he is buying an asset, so recorded building account debit. Guys, the asset which is purchased should always be recognized at its present value. What is the, at its fair value. What is the fair value of the building? 27 lakhs. But how much did I pay for this? My payment towards this to bank, I paid about 30 lakhs for this. I paid 3 lakhs extra. What is the 3 lakhs extra payment which I made? The 3 lakhs extra payment which I made should be considered as my deferred finance income, or I'll consider it as financial asset. Why is it considered as financial asset? Because this 3 lakhs, it will derive excess lease rentals over market rate over 20 years. For next 20 years, I will receive lease rentals which are more than the market rate because I purchased the asset at greater than its fair value. Since it is an operating lease, I am not going to write any ROU, I'm not going to de-recognize the asset. I'm not going to recognize lease receivable at all because it is a buyer lessor. He clearly said it is an operating lease. Clear? Check the entry that you passed. Check the entry that you passed, and that will bring us to the end of questions and the syllabus on IND AS 116. So 116 is concluded here, except for one small paragraph regarding your transitional provisions, which we'll have to discuss. But apart from that, due to COVID, there's a small amendment in the standard. There's a small amendment related to modification of leases in the standard that also we have to discuss. But other than that, we have discussed about all the problems. There are certain additional questions also we have to look at. We'll solve those problems. We'll look at those additional topics as well.